The surf park industry needs new capital to grow. So in terms of investments, definitely add a pad to your investment for promotional time for surf park MCs and VIP guests into your business plan. We want to bring together a panel of finance leaders from around the surf park space. I want to introduce former investment banker, current head of Whitewater and Endless Surf, Paul Chutter, to moderate this panel. We're going to talk about the trends that are emerging currently for continued growth in surf park investment. We cannot have surf parks without investment, so this is definitely going to be very informative. So let's bring Paul Chutter up and the panelists, please.
Welcome to our second panel. This is formally titled Raising Capital and Investing in Surf Parks. I am genuinely really excited about this group. We've got some real heavy hitters who are no doubt going to have plenty of informative insights, I think, based on their track records and experience to share here. My name is Paul Chutter. I'm the president of Endless Surf. I think we're going to try to take a slightly different tack. We're going to start really, really broad and focus on some macro themes, what we're seeing in the world today, what might have an impact on potential investors, developers, as they look at investing in the space today, and then start to narrow the wedge and get into some of the more specific, often risk-laden decisions that come about as capital starts to get put to work, and we move not only from early-stage investment, but into development, and eventually operations, which I think we would all agree is pretty critical. Before we do that, why don't we start off with just a quick round of introductions. First and foremost, Christina Chang, kick us off.
Hi, thanks, Paul. I'm Christina Chang. I run a real estate family office. We're owner, operators, and developers in the San Francisco Bay Area. And in addition to that, I do some VC and private equity investing, ranging from small angel checks all the way to the other extreme of incubating companies, one of which is Westlake Wave Co. And we make artificial waves for beginners and intermediates and teaching them how to surf. So coming at it from both the wave technology perspective and the real estate developer perspective.
Christina also happens to be far and away the best surfer on this panel, as evidenced by the one very oversized photo she keeps behind her desk that everyone sees on every Zoom meeting. Ryder, over to you.
Sure. Ryder Thomas. I am the founder and co-CEO of Pegasus Lodges, which is a developer and operator of sort of high-end, small format, natural environment surf lodges kind of around the world. We have operations in South Pacific, Indonesia, Canada, bringing something online, the Dominican, Azores. I'm also a partner in ProSwell, which is an integrated developer, operator, manager, and in certain circumstances, a provider of capital for multi-use or interesting surf park experiences in different parts of the world.
Doug?
I'm Doug Sherris. I am a co-founder and partner in Beach Street Development and Operations. We are developing and operating surf pools around the world. Also, I'll borrow a line from Tom Lockefeld in the last speech. He mentioned he's been on a 40-year mission to develop or to build waves. I've only been on a 4-year mission to build waves, but I've been on a 40-year mission to find and surf more and better waves. So that's what brings me here, and probably lots of you in the room. Thank you.
Andrew.
Andrew Limbacher. I'm with Lanyap Capital Partners. Anybody wants to try to spell that? You can call us LCP. We're a venture capital, private equity organization that invests in kind of location-based entertainment, tech-enabled concepts. Have a long history of financing location-based entertainment concepts, and typically ones that are more challenging to get traditional financing and debt. So I think that's the reason I'm on this panel.
Great, thanks, guys. Let's start off with a quick around the horn. I think it goes without saying the last 18 months have been unprecedented. We've seen a number of projects that had a ton of momentum. They've arguably slowed down. Some that were in their earlier stages, potentially put on ice for 6, 12, 18 months. Where we are today, I think, in many ways is equally as unique. We find ourselves in an environment where we've got rising bond yields, a fractured global supply chain that's leading to what I think was initially thought of as a bit of a transitory sort of inflationary period that seems as though it's going to be here for good. Expectation of tapering from the Fed, rising interest rates. So I'd like to hear from everyone here, what is your outlook for, whether it's the global or US economy, the impact of rising rates, access to capital, land acquisition costs, and in particular as it relates to a new segment like surf parks? Christina?
From a developer's perspective, I think rising interest rates obviously mean rising cap rates and decreased land value, which makes it kind of difficult, even more difficult for surf parks and to get them up and running. But from our perspective, we're really bullish on surf parks. I think the experience that surf parks provide are still unique, and there's a ton of money that we see when we're raising for traditional asset classes. And we really believe that as soon as you can really make the numbers pencil for these developments, that there'll be capital waiting to invest.
Ryder, you've had a significant amount of hospitality experience that has pulled in a surf element over time. How do you see surf stacking up versus some of these other verticals that I think investors are potentially more comfortable with, that have been around for longer? And is that capital still, by and large, parked on the sidelines, or is that starting to loosen up?
Yeah, I think it is in terms of the traditional surf experience as we think about it. But the reality is there was an emerging trend in travel generally and hospitality industry generally, sort of pre-COVID, that I think is only accelerated post-COVID, and that's really the interest in activities-oriented, sort of adventure-oriented travel experiences. I think you sort of layer COVID into it, and look, a lot of questions about how different categories in real estate are going to stand up, in the next few years. What I do know is that there's been a tremendous amount of capital raised or capital earmarked for a distress cycle in the hotel industry, a distress cycle that hasn't shown up yet, and at this point it probably will not. And so, I think at some point you're going to have capital flowing back into greenfield development in lifestyle leisure category generally. And I think if you take that fact and combine it with what I said a minute ago, which is the emerging trend of activities-oriented tourism and really experience-oriented tourism. The idea that traditional notions of luxury is not necessarily what defines aspirational travel today, right? I think anyone can jump on a plane and fly to an Oman or Four Seasons or whatever. It's a different economy, and it's a different value proposition. And surfing fits very nicely into that. So, on the one hand, surf is still new. This industry is still new, very nascent. But on the other hand, it fits nicely into a couple of, I think, very real trends in the industry that are going to, affect access to capital markets.
Doug, you've got multiple decades of experience both in real estate development, portfolio management, equities, et cetera. Looking at the climate where it is today, I mean, what's the outlook for you on the surf side, given, as you say, you've been laser focused on this space now for 4 or 5 years?
I think as Ryder said, and I think we're all here because the industry is at an interesting inflection point. I think in this country, we know that the pools that have been built were basically done with individual investor money, and in some cases with a single individual investor. We're at a point now where that's changing, and as you're all alluding to or speaking directly to, institutional capital is starting to come into this space. I think not that long ago, we all thought maybe you could build a pool for $5-10 million, and we're all excited to go surfing because Kelly was making great waves and so on and so forth. But I think the reality set in that these are really more like a $50 million, particularly for the large pools, more like a $50 million plus adventure. And most individuals are not ready to sign up for that or can't. So we're definitely at that point, and institutional capital, as it looks at the space, it looks for different things. It doesn't just care about how badly you want to go surf. It doesn't really care about how great the waves are. It wants to know the answers to all sorts of other questions. Do you have experience? Have you developed before? How did you do it? Who are you? What do your designs look like? Are they designed in a way that a pool can operate efficiently? Who's your builder? Who's your architect? Who's your engineer? Gets into all the nitty gritty, which there's a lot of. And then it gets into the operating side of it and who's going to operate your pool and what do they know about operating pools and how is that different than a water park and why, et cetera, et cetera. So there's an endless number of questions. I think a couple that don't get brought up as much today, specific maybe to this panel that are important to talk about, are resources. And so resources on the planet, as we all know, are declining, and the cost of resources in particular is going up. In pools, particularly water and power jump to mind. And in Southern California, we've seen power prices in the last 20 years go up close to 10x. Water prices are up 5x. So does your pro forma assume that in 5, 10 years, maybe your power prices are up 5 or 10x? That's a $500,000 line item today. If it's up 5x in 5 years, that's a pretty substantial hit to your pro forma. Same thing with water. So these are obviously extreme examples, but they're very real. And I think these are some of the harder questions we should be answering, not just because we want to be good stewards of the environment. I mean, pools, surf basins, they use power, they use water, a lot of it. And we need to show that we're doing a good job, and we need to do it collectively, because I think we're going to find, as more and more of these come forward, that people are going to kind of raise their voice and ask questions about these things. And are they a problem or are they a solution? And we need to all have good answers to that. And I think to the extent that any one of us kind of fails to answer those questions correctly, it's going to hurt all of us. So, definitely it's not as talked about from a capital standpoint, but I think it's going to be more and more relevant every day, and we're already starting to see it in some of the projects being entitled today. So.
Starting to see it in some of the projects, but I think investors generally looking at portfolios, whether it's real estate related, whether we're talking about equities, sustainability matters more than ever today. And I think when you compare where we're at now versus even 10 years ago, where these types of funds were the exception, and now investors more and more demanding, in fact, that they're the rule. Andrew, how about yourself? Outlook for the space now? You've been invested, as you said, in location-based entertainment for a number of years in your previous life at EPR. What's the outlook for you, and what is important for you and your colleagues at Lanyap?
Yeah, I mean, look, and to go back to your first question, I and I think a lot of people have stopped trying to predict what's going to happen in the macroeconomic world. I think 5 years ago I was at Alice, which is a lodging conference held in LA, and they were talking about, well, we're at the peak, we're going to have a dip, and to your point, the capital sitting on the sidelines trying to invest in lodging, which is kind of good barometer for the greater market. And then the next year they're like, well, it's going to happen this year. And then the third year they just said, we're not going to predict this anymore. We're just going to assume things go up forever. And then COVID hit, and pandemic, and everything gets shut down, and location-based entertainment was, is very much not at risk to tech or to online entertainment, and so it's good retail, but very susceptible to pandemics, and so nobody shows up. However, all the businesses that I'd invested in over the years in 2020 had, in 2021 now, have had far better years than 2019. So everybody's come back with a vengeance in a lot of these kind of location-based entertainment concepts. And really, what it tells me is what we have always thought about, I guess, our the consumer and how they're changing and moving and wanting to buy experiences as opposed to things. And I think what we've seen is that's the case, and that will likely continue. And I don't have any information to say it will do otherwise. So this business is that. This is something new that a lot of consumers don't have the ability to participate in. I live in Kansas City. I mean, there's not that many options for me to go surfing. So I'm one of the few people here who's not a surfer and didn't get into this business because of surfing. I've got interested in the space because I think the consumer wants it, and everybody aspires to do this kind of stuff, and I do too. So as far as what we're looking at trying to find that right operational, Rubik's Cube where everybody's got everything put together. And I think the financeability of these concepts is very hard, regardless of macroeconomic impacts, mainly because it's just new. It's just something different and unique, and generally lenders and financiers, they They got plenty of things to put their money into. They don't need to take 10 minutes to listen to you. So if they don't know it, you got to be really good at explaining it to them, and you got to give them everything they need, make it easy for them to give you their money. It's kind of the motto I tell people. So.
No, I think you're right. I mean, clearly the industry still in its nascent stages. There is arguably a limited pool of capital that's out there that we collectively have access to. Arguably more projects today than there is available capital, but we have seen a number of different models that have evolved and come out of the space. Public models, private, membership only, mixed-use developments on a larger scale, developments that are real estate backed, in particular when we're considering residential developments. Doug, when you assess as whether it's potential investor, potential developer, even potential operator, when you look at these models, what are the pros and cons of each of them?
So it's funny, when we started, so a number of years ago, people would come and they'd ask the question, they'd say, there was always an assumption that, well, surf pools, wave pools, surfing basins, they can't possibly make money as a standalone venture. So people would come and say, okay, how do I build this as an amenity to my housing development, to my mixed use of some sort, to my hotel, whatever the case may be. Today, the question is different. Today, we've got a number of pools in existence. They're successful, they're profitable, and so now the question is not so much about how do you build it as an amenity, but you get many more people obviously wanting to build freestanding, standalone, turnstile surfing attractions. And so it's interesting to see how that has evolved. And as we move forward with that, where we go, are these going to be like golf courses, like ski resorts, where you build real estate around them and sell it, lease it, what have you? Will they be freestanding? It seems like we're heading for an environment where you will have all of the above. There was an interesting, in the past panel, one of the gentlemen was speaking about iFly and using that as a comparison. And he painted a very cautionary tale. So we all are aware of the risks and curious to see. I mean, if I'm sure there are folks in the room who might tell you that there will be 200 of these built in the next 5 years. And there are those in the room who would probably tell you there'll be 10. And that will drive, I think, a lot of the answer to this question. If there are 200, probably, 100 will fail. If there are 10, maybe all 10 will survive. And how they get used that will kind of have a lot of bearing on how they get used, whether it will be to kind of infuse life into other real estate around them, or whether they will really survive as freestanding businesses. To date, they seem to be working on all of the above, and I think we're going to see all, and that's a long-winded way of saying we're going to see all of it, and we'll see what actually sticks. So,
Christina?
I think I would agree with Doug's assessment that the actual business models are going to vary quite a bit, but we see, surf parks as fitting really well into the fabric of a mixed-use development, whether that's multifamily, other retail, or hotel. So,
Ryder, one of the things you and I have talked about in the past is this notion, from the standpoint of attracting new capital, of combining known quantities, known entities, arguably more sort of plain vanilla type real estate development plays, with something that's a little bit newer, like inland surf. And in so doing, you can get someone comfortable with the overall play as opposed to just a standalone development. Can you comment on that?
Yeah, absolutely. I mean, there are a few things that I know. I know that the capital is always hard to raise. And when you're talking about untraditional capital sources of the magnitude that we're talking about to get any substantial surf park done, that's a tremendous amount of work, 30, 40, 50, 60, 70 million dollars from family offices or ultra high net worth individuals is rough sledding. So that turns us to the institutional capital markets and your sort of traditional capital sources of both debt and equity. I also know that surfing is very sexy, Surfing has for decades and decades and decades been a siren that has attracted the masses that don't surf to the participation or to the moth around the flame of the subculture of the people that do surf. And I also know that in an organization like ours, we have limited resources. We can't afford to chase a bunch of projects that don't have a right to life and don't have certainty of getting done. So with that in mind, and sort of going to the last point, everything we look at, we want to be collectively pretty sure that we can get it done. Doesn't matter if we have the best site plan in the world and a great piece of property. If we don't have a business model that makes sense for the institutional capital markets that I know how to go and speak to, it's either going to be a very long road for us to search all around and find all of those untraditional sources of capital, or you're just looking at this death march into oblivion of $500,000 here, $1 million there, which is a hard way to make a living, and so we approach it from the perspective of, look, we're going to look at large mixed use, multi-purpose projects that have components of a commercial ecosystem that traditional sources of capital understand and like. And I mentioned a few minutes ago, this certainty that I think we can have around the right to life of the leisure travel segment. Leisure travel, leisure hotels, lifestyle hotels, that makes sense. And that makes sense to institutional providers of capital. F&B makes sense, retail makes sense. All of these things make sense, and they're not necessarily sexy, they're not necessarily out of the box and innovative, but they're relevant and they're familiar. And so as we approach projects, we think about, okay, how can we take all of these quantifiable, known, not frightening pieces of a commercial ecosystem and make it sexier, make it pop through the addition of surf, where I'm not asking an institutional investor to make a bunch of assumptions about an industry that is so new, there's no real concrete data out there, or there's still, bits of misinformation flying around, people just don't know. And that can be enough to kill a deal, particularly of the magnitude that we're talking about. So for us, it's important to sort of take the best components of surfing and put them in a commercial ecosystem or in a package that is a bit more traditional.
Right. Andrew, we talked on our call that industrial is arguably the hottest real estate play at the moment. I don't think marrying warehouses with surf pools would be a great play, but do you share the vision that the other two do, and that by broadening the appeal of any development, you're just going to increase your ability to access liquidity?
Yeah, I think that's a good path if you have the capital and the viability to do that. But if a surf wave, again, as far as misinformation, is it 20 million or is it 50 million? I don't really know. But if it's $25 million and that's 10% or maybe even 30% of your project, then I think your investors and your financiers will sort of ignore it, or they'll just accept that it's an amenity, sort of like the big resort pool at the hotel in Hawaii. The reality is, though, most people are looking at this, and in this room are looking at developing a surf wave, and not necessarily a developer of all the other stuff. And I think that's where you were trying to bring this kind of entertainment concept, or active entertainment concept, I guess, into life without having to buy an extra 20 acres of land or 10 acres of land, and without having to be a developer, because development's hard. These guys know it really well. Like, it takes a long time, and it's a process, and who knows what changes in the world during that period of time. So I do agree with it, and I think everybody, there's a lot of projects of people I've seen in this room, they've found that kind of happy medium where you can add some elements that are really well known, and I think that does bring that investor in. I think at the end of the day, debt really decides a lot, and the debt and lenders just like doing what they know best. And right now, lenders know industrial best, and it's just really easy, right? That will die, that'll stop. It used to be it used to be office, and now it's industrial, and it's multifamily, and it's a few other things. I don't know that it's ever really been kind of entertainment and recreation, and I don't know that it ever will be. You use water parks as an example. It's really well-known business. There's a lot of them that are very successful and done very well, but it's still really hard to get debt unless you're, Disney or somebody who's really Six Flags or somebody who's got a lot of capital and a big balance sheet. It's hard for the one-off person to go build a water park somewhere. It just takes a lot more effort because it's an unknown thing.
Yeah, the other frustrating thing about debt is, I think providers of debt are generally assessing risk and underwriting for today. They're not looking down the road and thinking this is how the market's going to evolve, or there's this exciting nascent industry coming and let's get into it. They're thinking about what is the state of the world right now, and as I put capital to work, how can I make sure I keep my job by not doing stupid things.
I think lenders are also very risk averse. When we talk about surfing being sexy, I guarantee you that's not what they're underwriting for. They're looking at, and as a developer, we're looking at the entire development and making sure that the numbers pencil for the entire development. And surfing is a part of that, but the whole thing, when you mix together the multifamily, the hotel, and the surf park, all of it has to pencil as one single development because you're getting a loan for the whole thing.
Yeah, it's a good point, and I think that's a nice transition to a discussion around the impact of operations, financial considerations, capacity plans, op costs, and really a discussion around what can elevate the floor of your model, sort of protect against some of that downside risk when you're stepping into something like this. Equally, the importance of management experience and credibility in the role that plays in any of these developments. Christina?
Yeah, I think I break it down into 3 different categories from an investor standpoint that the project has to check the box for to be an investable project. I think first, the equipment, it has to work, and it has to be affordable. The second is the experience. I think the customer experience has to be premium. It has to feel special, and the flow of the facility, everything has to be really seamless. And then the third thing is execution, and that comes down to does a team have a track record of execution? How confident are we that this team and the developers are going to be able to hit the numbers in the pro forma? You can engineer the pro forma however you want to, but the only thing that really matters is that you actually hit those numbers. And from a developer standpoint, you need a payback period for the whole facility of anywhere between 3 to, on the very outer edge, 7 years on the payback period. So that's kind of how we break it down in terms of how these projects actually get done.
Yeah, I think the operations is hugely important. I think anytime you're going to talk to anybody about capital, being able to show your team and somebody who's been there and done that is going to help you. And not just like necessarily in the wave business, but really in other businesses, and can relate the two together to something that will allow somebody else to understand it. Because so often, you can quote some, Bristol's numbers or something, but the banker can't see that, and they're not going to really put any, they're not going to trust those numbers. They're going to trust the person who's actually done it before, or the group, or the management team. So I think it's a necessary to all the other points that you said.
Yeah, and we actually, it's a good point. And so we try to tell people, look, before you go out and do something like this, before you build a project, operate a project, make sure you do talk to somebody who has done it before, somebody who's both operated and developed, because you need that from day one. Literally, you need to know where to put the buildings relative to the pool. There's a difference between putting a surf center that's 50 feet from the beach and one that's 10 feet from the beach. It changes the experience. Just the nuance as is your pool going to cater to group business? Is it going to cater to individuals? Is it going to cater to the hospitality project that's next door? You will design and develop your project differently for every scenario. It's interesting at BSR in Waco, they're getting almost 3 times as much money per hour surfed when they sell by the day, so for their group business, as they do when they sell by the hour. And it's kind of counterintuitive. We would all think that if somebody comes in and buys your surf basin for the day, you probably get a discount. But people are actually paying a significant premium. And the reason seems to be, well, scarcity, obviously, but people want to surf with their friends. They want to surf with people that they know. So again, that's part of the experience that isn't necessarily in a pro forma, but it's important. And you have to think about, with the size of the lagoons today, there are very big pools getting built. And that is great from a throughput model, But on the other hand, from kind of an intimacy standpoint, from a standpoint of an experience, it has some drawbacks. And so do you really enjoy surfing in a lagoon for an hour with 15 or 16 people that you don't know? You catch a wave, it's great that you get a 150-yard ride, but you might not see the guy again for 5 or 10 minutes, versus surfing in a much smaller basin where a guy might take off. You might only get a 15-yard ride, get a couple turns in, but he's right next to you. So you're hooting him into the wave, you're together, maybe there's only 5 or 6 or 7 of you. Completely different experience. And which guy goes home happy and wants to do it again the next day? They both probably do. They're both probably happy. But there's just so many nuances. Someone on the panel earlier was talking about, I think it was Baptiste, about, you paddle out on a long board in some of the lagoons. If it's a tight space, it's hard to turn. If there's too many people, there are all these nuances, which, again, they're important when the pool is up and running. But there are also things that maybe can be solved for before you ever start your design, before you ever start your development, your engineering, et cetera, and you choose your tech. So all important things to think about.
Yeah, I think that's a good point. Let's continue down the journey and talk about that tech decision, flexibility, contingencies for best laid plans. And I think, as Doug, as you and I discussed, as potential developers or investors, everyone always dreams of Saturday, July 4th, peak summer, the pool is slammed, the cash register is humming. How do developers or investors plan for, I think you use a date in November. I typically use Tuesday, January 28th.
We use Tuesday morning at 9 a.m. in November, yeah.
When it's cooler, it's maybe raining, people are by and large at work. How do you provide a floor that you can put in place to ensure that the operation as a whole can remain viable, not just 4 months of the year, but 12 months of the year?
Yeah, I'm sure I'll jump in. I mean, that again goes back to some of the same issues we're talking about. You need to plan for that ahead of time. You need a pool. You need a facility that is designed to optimize the guest experience. And really, when you start trying to put people in the water at Tuesday in November at 9 in the morning, when kids are in school, parents are working, maybe the surf is good at the beach down the street, and how do you fill your facility? You obviously need marketing, you need branding, and you need a great guest experience that makes people want to come back. But again, all things that you want to think about before you start your design. Hopefully you're in an optimal location. And again, the sort of tertiary locations will become more and more challenging. But if you're in the right spot, if you brand and market effectively, if you operate in a way that people have a great experience and want to come back, you should be able to, at least what we've seen so far, the demand seems to be there. So.
I think it's, in addition to that, your customer base and being able to focus, you're going to have your daily attendants show up, then you're going to have your group business, and you're going to have your tourists. And so that's going back to location. Like, are you able to access all of those different customers, particularly for these, bigger waves that need that? It's not different than what every attraction company that we know has dealt with for years. So they got, Tuesday is when the groups come in and do a buyout, and it's cheaper, and you don't make as much money, but you keep it active and keep people in. And all the other location-based entertainment, concepts that, I've invested in over the years. I mean, yeah, your hotel indoor water parks, October, November, like you're finding other ways to make money that, to just, keep that floor low.
Were you going to jump in, Red?
No, I was going to say exactly what Andrew just said. I think it's it's a game of market assessment, opportunity assessment, and then obviously location. And to me, that's a big driver of so your demand assumptions. I think going back to the call of your question as it relates to operations, that is mission critical from our perspective. And then, as Christina said, it's execution and certainty of execution as it relates to development and operations. So, I think the one takeaway that I would have is there's never too early to bring in credible operators that have been there before and know what they're doing, know what they're talking about, and can sit down and start helping you think through some of the master planning considerations.
Yeah, I couldn't agree more, and we're fortunate to have a number of those in the room today. So talk to these groups. They are very dialed in. They know what the pitfalls are. They know what to look out for, and they're a great resource who will support you really from cradle to grave. Just quickly, a few parting words of wisdom as we go down the lineup. Christina, let's start with you.
Perfect. I think for me, one of the biggest takeaways of being here and spending the morning with everyone is how important it is for everybody in this room that these early projects are successful. I think a rising tide lifts all boats. A failed major project at this point in time would be pretty bad for every single one of the wave technologies. And so we're super excited, and I think the more of these projects that get built, and there's a track record of not only execution, but also attractive returns for investors, the faster you hit that hockey stick part of the S curve.
Yeah, I agree with that. I think, for me, I see a potential pitfall in the industry is this idea that, it has to be created by surfers for surfers. I think surf is obviously important and authenticity is important. But, there's also 40, 50 years of learning and history in the water spark industry, which is very similar in many, many ways. And I think as you network and walk around the room, you're going to see many different, very experienced, very smart people that come from outside of the surfing world that can add tremendous value to your project. And as Christina said, I mean, it's too early to screw this up. One major project that gets funded and doesn't happen, or ends up a big muddy hole in the ground, is going to be a big black eye on the rest of us that are coming down the track. So, leverage the resources that we all have access to.
Yeah, I would agree with Christina and Ryder. I mean, that's absolutely right. A rising tide is going to lift all boats, particularly at this early stage of the industry. So we definitely all want to succeed, and to the extent we can, help each other succeed. And that really means asking hard questions early. Make sure your operations, your development, make sure you ask people challenging questions and get the right answers. There's a lot of misinformation out there. Do it the right way. Don't skimp on safety. Don't skimp on efficiency, et cetera, and make sure you can find your capital. So.
Yeah, I agree with everything they said, and I would say that I would just what I said earlier, make it easy for people to give you their money, and I would say that with financing, give them the story, tell them the whole alpha to omega, the whole industry. Don't assume they know, and just be very open and give them a lot of information, have that prepared and have it professionally done, and that will get you credibility and move things along faster, or get you to a yes or no quicker. And with the customer, it means just don't be a hindrance to them actually buying the product they want to buy. How many times are you waiting in line for something to give somebody money, and you're like, I wanted to give this to you earlier. Like, I could have bought 5 beers by now, and I'm only buying 1. So, and also I would say, expand your customer base, not just the surfers, as we said. Like, this is something that I think in the last panel we talked about is going to expand far beyond what today's surfers are. And so opening up and allowing more and more customers to come in and making it easy for them to participate in your activity and have a good experience and, yes, give you their money will make these things more successful.
Awesome. Any questions for the group up here? Sure, sir.
I've got one. It's about energy. People have mentioned energy several times. I'm in the business of helping people to understand how much it's going to cost them to actually run their facility, and we are not brushed off our feet. I'm an electrical engineer by background. Electrical engineers can calculate kilowatt hours, the actual usage, very easily. What they don't take into account, in my experience, is that the utilities are playing a game of screw you when I can. And if you're not on top of it right from the beginning, it will end up with enormous OPEX costs down the track. I'm going to put in a straightforward plug. Do your own electricity. Generate your own electricity. Generate your own heating and cooling. Then you can go back to the utility. And you've really got to, because they will screw you.
Not a question, but a statement, and a very well-laid one at that. I couldn't agree more, and I think to address the point, and I'm sure Jess would have a few words to say about this, but what this space is really wanting at the moment is objective third-party assessments of technology with a true view and holistic approach towards sustainability, and as you say, what that means in the long run. One more? Yes.
Brief statement, not a question. First of all, thanks. So a great panel. It's really nice to hear some of your assumptions confirmed by people that know what they're talking about. So we feel like we're on the right track after hearing you. How can we meet you guys?
When's the next
Anytime.
networking
We're,
break?
just grab Doug. He's going to be walking off of the stage in a couple minutes. And we'll track you down afterwards.
One more, and then we'll wrap it. Up top, sure.
Just a question on technology. I mean, obviously we heard from some providers before, some of the wave pools are in the ground today, some are coming in 2 years, a year out. How much does that come into play in terms of the risk profile that you're looking at in terms of some of these wave parks that are being built and how they're funded either through equity or through the institutional side of things?
Yeah, I'll say my perspective. I think that at this point, we can be reasonably sure that all of these techs are working, are going to work, and are going to be able to provide fulfilling guest experiences, to be honest with you. I'm not a big believer that the next most amazing wave is going to, create this big sucking sound as all the guests run from one technology to the next one. I think really what makes a project differentiated, and I believe this is the case for surf parks, it's certainly the case for our surf resort business. It's everything else around it. It's general programming, it's the guest experience, and there's so much more than surfing that goes into the guest experience. Yes, it's why we're there, it's the community, it mobilizes us, all that stuff, but it's just a small piece of what you should think about when you're thinking about programming and when you're thinking about creating these experiences. From a capital perspective, capital doesn't care, I've had, a bunch of conversations in the last month with sort of, large scale traditional lenders and equity providers, and again, to go back to what I said a minute ago, the techs work. So what else are you doing? What else are you doing that's going to make, to Christina's point a minute ago, the numbers pencil and make this an investable project?
So I might just add, I agree with everything Ryder said. I might add to that, though, in terms of technology, one of the things that is interesting today is, I guess, the point that it does all work, and then the question is, does it work well enough? So as surfers, we're all looking for kind of that best, that dream wave, the longest wave, the hollowest wave, whatever you like. But today, tech is actually good enough that they're good waves. And so as surfers, we don't surf Rincon and Malibu and Rocky Point and whatever every day. We surf some crappy wave in our backyard, and that's what we're satisfied with. But if it's halfway decent, we're still happy. We've had a good session, and as I said earlier, the experience, if you go out with a couple of friends, you get good waves, you get a couple turns, you're pretty happy. If you get one turn, you sometimes go to work and you just remember that turn all day. So technology today, though, is good. I mean, there are high-quality waves to be had in man-made waves. And so, yes, there will be more technology. Yes, there will probably be bigger, longer, hollower, whatever waves coming. But as long as you've got a facility that has very, very good waves that people enjoy surfing, you can go out and get a 100-yard wave today and do 5 turns. Surfers are always going to be excited about that. And so the rest of the experience around it is what's going to kind of be the differentiator between that facility and another one. But technology today is, I think, good enough that people are going to be satisfied with these currently built pools for decades to come.
Yeah, and I think it's also important to just consider the tech partner as a member of that development team. So what we're looking for is obviously partners that are commercial and aligned and are willing to help us figure out a program and a business plan that's going to make the development successful.
I'll just really quick, and at EPR we did a lot with Topgolf, and Topgolf wasn't necessarily the best tech, but it operated the best business, and it's by clear the biggest winner, and really the only one in the space that's been successful, and a lot of other people have come into it. So I would say focus on operating your business, and that's what's going to win the day. The tech is good enough, and it's out there, and build the business around it.
Yeah, I would agree with what everyone on the panel has said. I think from a technology perspective, it is so easy to overweight, and as surfers, it's very easy to overweight the nuances in the technology, but I really don't think that's the differentiator. When you look at making yourself attractive to all parts of the capital stack, I think it's really about execution, and not just on the technology side, but also on the developer side, and attracting other real estate developers who have a ton of experience and a track record of development, because it's going to be the developer that brings that lender relationship and fills the largest portion of the project, which is hopefully the debt. And so making sure that the entire team has a ton of experience and a track record of at least development in the traditional asset classes.
Awesome. That is your Raising Capital and Investing in Surf Parks panel. Christina, Ryder, Doug, Andrew, thank you all for your time.